the state and territory governments to agree on new rules around COVID as cases surge. That's our main story. Also today, tech stocks keep Wall Street humming, a surprise billion-dollar deal, and bad news for illegal streaming. It's Thursday, the 23rd of December 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Kevin Roberts, former CEO of Cricket Australia, who's about to launch a new sports clothing brand. And don't forget, if you're listening on Spotify, the platform has just switched on star ratings for podcasts. So please, if you're enjoying the podcast, give us 5 stars. And if you're listening on Apple, why not leave us a quick review too? And one final thing, as we head into the summer period, we will still be with you every day, but with shorter 5-minute episodes. So even as you're relaxing on a beach somewhere, there is no escaping us. Isn't that right, Sean?
That's exactly right. You can never have enough fear and greed, even over your holiday break.
My thoughts exactly. Anyway, on with today's news. And Sean, the National Cabinet met yesterday and there looks to be greater agreement around COVID, though there's still few new restrictions being mandated.
That's right, Michael. It's a very interesting dynamic at the moment. Cases are surging more than ever before. Governments are loath to introduce restrictions 2 days out from Christmas, and individuals are taking things into their own hands by wearing masks, QR coding in shops, and of course getting tested. Following the National Cabinet yesterday, the Prime Minister Scott Morrison said there wouldn't be any change to the booster timeline. It stays at 5 months after the second shot. Reducing the interval won't speed up the rollout of vaccinations, Mr. Morrison said. GPs and pharmacies will receive more for providing vaccinations, and the state and territory leaders will rely on an expert medical panel to provide a common definition of what a close contact and a casual contact is. That definition will come in a fortnight's time. Also, National Cabinet will take advice about abolishing PCR tests when people are entering states. At the moment, they're using up too many resources. Mr. Morrison said while the Omicron variant posed new challenges, so far the hospital system is coping. Mask wearing in indoor spaces is highly recommended, but it's not mandated.
And Sean, it really looks like a pretty light touch considering the surge in COVID cases.
I agree with that. New South Wales yesterday recorded 3,763 cases with a positivity rate of 2.48%. That's the proportion of the 151,000 people tested yesterday that are positive. It's the highest level since the pandemic began. An emerging problem in Sydney, in particular, and in Victoria, are the queues for testing with waiting times up to 4 hours. Yesterday, Michael, I went to a place at 12:30. It closed at 4 and I was told I couldn't wait because the queue was that long.
That's extraordinary.
It is. Fortunately, the number of hospitalised cases in New South Wales is still pretty low. It's just over 300, though we've still got a way to go there. Victoria recorded 1,503 new cases yesterday. In that state, most of the people in hospital are older and or unvaccinated or have previous health conditions. That's good news, though the Omicron variant really hasn't hit Victoria hard yet, with only 60 known cases. The state will ramp up booster shots from 4 January. South Australia recorded 198 new cases yesterday. That's 3 days in a row above 100 cases. Fortunately, only 5 people are in hospital in that state. Queensland recorded 185 new local cases yesterday, twice the number on Tuesday, and easily a record. The state government has introduced mandatory mask wearing in cinemas and theatres, as well as for hospitality staff. Authorities expect thousands of cases in the state by next month. In the ACT, the number of infections was 58, and that's despite a 98.4% vaccination rate. Only 3 people in Canberra are in hospital. Tasmania reported 12 new COVID cases, and Western Australia introduced a hard border with the Northern Territory and Tasmania. It's now locked off to all the rest of the country.
Okay, all right. The situation is continuing to evolve then. So how did markets perform yesterday, Sean?
Well, the S&P ASX 200 ended the day up slightly to 7,365 points. It was a very mixed day, with markets rising initially, then falling back before ending the day pretty much where they started. The tech stocks were the outperformers, while healthcare also did well. The real estate sub-index was the worst performer. Among the large caps, Michael, CSL was up another 1.7%. It's had a very good week. The big miners were all lower, with Fortescue Metals and Rio Tinto both down close to 2.5%. The banks and healthcare stocks were mixed. The retailers were lower and Telstra was flat.
And Sean, as we head into the Christmas break, Wall Street remains volatile, though the tech stocks keep shining through.
They sure do. About half of the rise on Wall Street since April is due to just 5 big tech stocks: Microsoft, Nvidia, which designs graphic processing units for the gaming and professional markets, Apple, Alphabet, which is the parent company of Google, of course, and Tesla. Apple is closing in on $3 trillion in market capitalization, and Microsoft is worth around $2.5 trillion. These large growing tech stocks were supposed to fall out of favour because as economies reopened, they were supposed to underperform. But that just hasn't happened. The challenge for investors, particularly passive investors, is the size of the tech stocks. It means some portfolios will now start lacking diversity, and that could trigger poor returns into next year if the tech giants underperform. If we move away from Wall Street, European markets are ending the year close to their highs over the past 12 months. Despite the outbreak of Omicron, markets are generally pretty positive, with London's FTSE up 11% this year and the stocks at Europe 600 up 18%. That's better than Wall Street and better than Australia. The Aussie dollar is trading above 71 US cents and over the last month or so has really struggled against the greenback, reflecting the US's changing stance on interest rates. For the year, the currency reached almost 80 US cents in February, dropped below 69 US cents a couple of weeks ago, and is now back to that 71 cent level.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, as we get closer to the end of the year, there seems there's been a big rush to get a few deals done, and another big one was announced yesterday.
Sure was. This one involves Link Administration, which has been in the sights of predators pretty much all year. Link went into a trading halt yesterday morning, and most of the talk was about private equity giant Carlyle upping its $2.8 billion bid. Instead, it was Canadian legal software group Dye & Durham bidding $3.5 billion for the Wealth Management Administration Group. The offer price was a 15% premium to Tuesday's closing price, and Dye & Durham will also acquire Link's 43% ownership in the recently spun out conveyancing business, DEXA. When Link's shares started trading again yesterday about lunchtime, they jumped 15%. Now, Link's board has unanimously recommended that shareholders vote in favour of the scheme in the absence of a better offer. Michael, it looks like in this case, the board of Link did a pretty good job for shareholders.
Yeah, sounds like it. And Sean, property giant Charter Hall bought a 50% stake in Paradise Investment Management. Another deal.
Another deal. The real estate group paid $207 million for the half stake in the business, founded and run by well-known investor David Paradise. It diversifies Charter Hall's earnings streams beyond property and builds its funds under management. Now, Paradise Investment has $18.2 billion in funds under management, and generally it invests in listed equities. Paradise gets access to bigger clients through the deal. There'll be more of these types of mergers in the next 2 or 3 or 4 years as wealth managers work hard to get bigger to satisfy the demands of the mega superannuation funds.
And Sean, for a little while, we've been watching fixed interest rates around the country creeping higher, and the creep continues.
Sure does. National Australia Bank lifted its fixed rate mortgages yesterday for the second time this month, but all the lenders have been lifting fixed rate loans as market interest rates creep up ahead of expected higher inflation next year. According to the financial comparison site CanStar, as reported in the Financial Review, rising rates has not deterred buyers, with the average size of an owner-occupier home loan up 16% to over $524,000 in the past year. The average size of a loan for first-home buyers was $459,000, and for investors, it was $530,000. Now, CanStar also puts out data on what interest rates are. Westpac has the lowest one-year fixed rate at the moment at 2.34%. 5-year rates are as high as 3.59% at ANZ, Commonwealth and National Australia Bank. Westpac also has the lowest variable rate at 2.19%, while the other three are charging 2.29%. Looks like Westpac at the moment looks best.
And I mentioned this one, Sean, at the top of the show. The big telcos in Australia have been told to stamp out illegal streaming.
Yes, an alliance of foreign-owned television stations and filmmakers has secured a ban on a bunch of websites that illegally stream movies and other content. The federal court has ordered Telstra, Optus, Vocus, TPG and Vodafone, among others, ban a long list of streaming sites. Now, the case was led by Roadshow Cinemas and included Disney, Paramount, Columbia Pictures, Universal Studios, Warner Brothers and Netflix. Perhaps not surprisingly, none of the streaming websites in question responded to requests to join the matter, and indeed none appeared. Perhaps they knew they were being illegal. What it does mean is that the telcos have 7 days to block the sites. So if anyone at your place, Michael, is streaming illegally, it's all about to end.
Running through some of the other stories around today, Sean, and there was a big development yesterday in a story that we've been talking about for a little while now. The competition regulator will allow manufacturers of AdBlue, that's the diesel additive that's in short supply in Australia at the moment, to collaborate to help get more diesel into the hands of users. They can share information about things like stock levels, supply channels, and prioritise certain customers, all things that normally can run foul of competition policy.
Global research house Morningstar will purchase the international business of wealth management technology provider Praemium. The $65 million deal means Morningstar will take over Praemium's UK, Jersey, Hong Kong and Dubai businesses. The announcement triggered a 2% jump in Praemium's share price.
And Andrew Forrest's Wyloo Metals looks to have won the battle for Noront Resources in Canada after BHP said it won't match the most recent bid for the company by Wyloo. Noront operates in the so-called Ring of Fire in Canada, which is rich in nickel, copper and platinum. All right, Sean, what's the key overseas news this morning?
Russian President Vladimir Putin has warned of appropriate military technical measures, his words, in response to NATO's expansion towards Russia's borders. The United States is hoping to restart diplomatic talks with Moscow next week, with 100,000 Russian troops still deployed on the Ukrainian border. NATO has been mobilising, fearing a potential invasion of the Ukraine by Russia. Michael, while most of us are waiting for a booster shot, Israel is busy rolling out fourth jabs for people aged over 60 and medical teams. Israel will be the first country in the world to provide the fourth shot. And finally, China's enthusiastic property investors are turning their attention to luxury watches, according to the Financial Times. Apparently, they present a better store of value than apartments at the moment. Rolex and Patek Philippe watches are particularly popular. In fact, there's been a 40% jump in China's imports of Swiss-made watches in the first 10 months of the year.
Isn't that extraordinary? When you're choosing between an apartment or a luxury watch, there's plenty of money sloshing around, clearly.
Sure is.
All right, up next is the Daily Interview. And today, Sean, you're speaking to Kevin Roberts, the former CEO of Cricket Australia and now the co-founder of No Timid Souls.
Yes, we should see the products on the shelves in the second quarter of next year. Kevin runs through the business plan, why they've set out to manufacture a premium athletic wear group. Really interesting chat. Good Christmas chat, I'd say, Michael.
Yeah, certainly is. And considering it's a $170 billion industry, it should be a pretty exciting time for them. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 23rd of December, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook. And don't forget that 5-star rating. I'm Michael Thompson, and that was Fear and Greed. Have a great day.